the big stocks that need to be on your radar and how the newsmakers are going to react in trade today. Markets have given up key supports day in, day out. Yesterday we gave up 11,100 as well. We are below 200 DMA on the Nifty. We are below 200 DMA on most of the other benchmark indices, and we are below 200 DMA on select large caps as well. Nilesh Jain as well as Amar Singh are with us this morning to talk about the trade setup going forward from here. Amar, let me start with you. How do you expect trade to pan out? Traders are betting on a bit of a recovery. In fact, that was the sentiment going in yesterday, not so much today. But do you think there could be a floor at this 11,050, 11,100 mark, or there is more pain ahead?
A very good morning, Dipanshu. See, what we are witnessing in the major indices and across the board, the sell-off which is there. Actually, you're right that 11,000, 11,050 is a very crucial and very key support level, because earlier if you're looking at the levels, it was somewhere around 11,400. Once that was breached, we've seen almost a 300 point sell-off from there. So 11,000, 11,050 becomes a very crucial support zone, because even on the long-term charts, I'm talking about the monthly charts, that was a very crucial support. So if that being taken out, 11,000 being taken out, then the next crucial support comes around 10,800 odd or so. However, what we are seeing is that we are very close to a crucial level on the one of the moving averages, if we look at it, because that moving average was once penetrated on 19th February. So it's almost 5-6 months prior, and that has held. And yesterday also the closing was above that. So it's possible that we could see some intraday trading below that, and then a bounce back. But the bounce back again, higher levels would be sold into, because looking at Nifty, technically if you look at Nifty, what we are seeing is somewhere around 11,250, 300. Now that should act as a very crucial resistance zone. So higher levels will be sold into till the time we don't see consolidation and 11,000 not being taken out. Because if 11,000 is taken out, then we could see some real sharp selling towards 10,800 levels.
Right. Nilesh, what about you? What's the sense you have on the markets? Banks have been the key drivers once again as far as the sell-off goes. PSU banks came under pressure. You had pressure come in for select private banks as well. I mean, look at what happened to an IndusInd yesterday. PSU bank index was down nearly 5% as well. Is this going to be the key laggard in the markets once again? I mean, if banks continue to underperform, how much of a pain are we looking at?
Hi, good morning, Dipanshu. Well, if you look at the overall structure, it has been making lower top and lower bottom in the recent times. It's almost 8 to 9 trading session where we have seen continuous sell-off in the market. If you talk about Nifty, it has provided breakdown from its key levels, that is 200-day moving average, like you have mentioned, which was placed around 11,140 odd. Below that, it has also closed below the same. Now, the immediate level that we are expecting is 11,000, where we have seen the maximum put writing and maximum put OI concentration is placed in the monthly expiry of the August series. So that clearly indicates there could be possibility of a bounce back, but Nifty should fall till that level. 11,000 is the crucial level that we are expecting. If at all it unable to sustain above the same, then the sell-off may continue towards the levels of 10,800 as well. On the higher side, 11,200, 11,300 are the key resistance level for the Nifty. If we talk about Bank Nifty, you have rightly mentioned PSU banks are leading from the front. Apart from that, couple of index heavyweight like HDFC Bank, ICICI Bank, and also Axis Bank are not supporting the overall structure. If you look at the structure of the Bank Nifty, again lower top, lower bottom, and it also provided breakdown from its previous swing low. Now the immediate level on the downside that we are expecting the Bank Nifty is 28,500. We may see that level coming in today's trading session as well. On the higher side, till the time it doesn't sustain and close above 29,000 mark, there could be possibility of a further sell-off to continue in the Bank Nifty as well. It's overall Nifty and Bank Nifty, we are expecting a sell on rise kind of a strategy should be utilized in the Nifty and Bank Nifty, both the counters. And apart from that, the IndusInd Bank, like you mentioned, we saw a couple of sessions, it has rallied, then yesterday it provided a breakdown. Now there could be possibility of overall private sector bank to continue to underperform going forward, and that may add pressure on the overall Bank Nifty structure. It's overall, I would say the markets are not good to go long at current level.
Markets are not good to go long at the current levels. Let's bring again Axis Bank, again the yesterday chart here, and that will tell you again how the stock could actually start post result reaction here. That's the stock for you again. Gradual, very steady underperformance towards the end. Again, no major attempt to again do short covering also, and the results actually are going to accelerate this again what happened yesterday. So again that perhaps going to boost the Bank Nifty's performance also. But on that, Amar, let's talk about your top trading calls for today.
Yeah, there are two calls. One is on the buy, the other is on the sell side. So the first one on the buy is TCS. Because looking at TCS, what we are seeing is that this is one stock which has really weathered the storm so far, and technically also, if you look at TCS, continues to be strong on the long-term charts, and even on the weekly charts has moved from oversold territory. And I would say on the daily charts also, yesterday was a sharp up move. So TCS is one stock one can look at buying. So ideally, any dip towards 2160 to 165 can be used as a buying opportunity, with a stop loss below 2100 levels and a target of 2265 on the upside. And the second stock to look, that is on the sell side, is Adani Ports. What we are seeing here is that this stock has not been able to hold its earlier gains towards 410, 420 levels. Currently it's around 373 levels. Looking at the weekly charts as well as the daily charts clearly show that there is selling pressure in this stock. So any pullback in this stock towards 376, 377 levels can be used as a shorting opportunity, with a stop loss of 388 and a target of 357 in the short term.
Right, so going with the TCS, the tried and tested in a volatile market like this, TCS, Infi, some positivity we saw in HCL Tech yesterday as well. Tech Mahindra will be reacting to its numbers. So there is definite safety in select large cap IT counters in a very volatile market like this. So Nilesh, what about you? Which are the stocks you would be betting on today?
Well, Dipanshu, I have three sell recommendation and one buy. I want to start with sell first. Yesterday we saw a breakdown in REC Limited from its lower top, lower bottom clearly visible on the chart. It has provided a structural breakdown. One can go short in REC Limited with a stop loss of 138.5 for the downside target of 130. My second sell recommendation is Ultratech Cement, but here I want to recommend buying put option rather than going selling in the future. One can buy 4200 put in the range of 85 to 90. On the downside, we are expecting Ultratech Cement to touch the levels of 4200 or maybe 4150. So one can buy 4200 put in the range of 85 to 90. Stop loss should be placed around 65. The target that we are expecting is of 130. My third sell recommendation is on IGL, where it is on the verge of a breakout from its head and shoulder pattern. The breakdown level is placed around close to 290. Well, one can create a short position at current level as well, with a stop loss of 294 is the immediate target that we are expecting. One can keep a stop loss of 305. The only buy recommendation that I am looking for is TCS, like Amar has already covered. It has provided breakout from a symmetrical triangle pattern. Just part of a disclaimer, we have also recommended buying to a client in yesterday's trading session. On the upside, we are expecting a target of 20 to 40. One can keep a strict stop loss of 2140. And in this kind of a market, only pharma and IT, these are the two spaces where we are slightly on a positive side.
Okay, so TCS looks like consensus call again, a rush to safe haven again. That's the trade which is happening. Now, while we talked about TCS, let's also bring some more stocks. Again, Ultratech Cement again is a short call from Nilesh. Let's bring ACC again, what ACC has done over the last two sessions. So let's bring a 1 month chart for ACC, and we'll again see again how in the last two sessions, lot of short positions have been created in cement stocks here. That's ACC stock for you again. So 1600 was something where we actually saw the peak. Again, at the peak time, again, results came out. The June month has now finished. Monsoons are in full swing. Usually, stock actually gives up a lot of gains again, which it makes in the last 2 months here. So that's ACC for you. Nilesh, a follow-up on ACC. Does it have a similar sort of negative impetus like Ultratech, and also Grasim, because it owns Ultratech? Are you also negative on that?
Well, I am extremely negative on Grasim, but for ACC, I think there are a couple of support level are placing. Immediate support is placed around 1500. Then we have second support level which is around 1480. So I'm not. The chart doesn't look that negative, which Ultratech Cement and Grasim are indicating. Overall, cement sector no doubt is looking extremely weak. India Cement is other counter which has provided breakdown in yesterday's trading session. So overall, cement is looking weak, but for ACC, it has couple of support levels. 1500, 1480 are the two immediate support on the downside, whereas on the upper hand 1650 is the immediate level. If at all it takes out 1650, then there could be possibility of a pullback rally to continue towards 1700 as well. So overall, cement sector looks negative for me.
Right, cement looks negative. Amar, you of course have chosen to go with large cap IT as a defensive. What's happening with the Reliance Industries? It gave up its key support yesterday. It's below 200 DMA right now. Key drag as far as the market is concerned. Below 1200, how low can RIL go now?
Yeah, looking at Reliance Industries, again, I would say that technically, if you look at the stock, it has got support around 1170, 1180 levels. So that clearly, if you look at the major index, that is the Nifty, that also corresponds to somewhere close to very crucial support zones, and it's forming a similar pattern on the as far as the index is concerned on the monthly charts as well. So monthly charts has taken out its crucial support zone. And as you rightly said that I would say that trading consistently below 1170 levels could open the doors towards 1120, 1100 levels. So this is very crucial support zone for the index as well as for Reliance as well. Trading below 1170 levels could lead to a sharp sell-off towards 1120, 1100 levels in Reliance.
So that's Reliance Industries, very important stock, which again basically has slipped below 200 DMA. Let's bring our 2-3 more index heavyweights here. So first, HDFC, the stock again which fell sharply, then again registered a good rebound, again showed for us it has stabilized. Now actually we are seeing some more sort of cuts coming here. Bring the 1 month chart here, and it will tell again our viewers again what has really happened again. Sharp offloading of positions have been happening again over the last few sessions here. That's the one again from the peak 2350. Now we're down 200 points again from there, and still again we're trading at a 1 month low here. Amar, what's the bottom of HDFC? Another index heavyweight.
Yeah, looking at HDFC, I would say HDFC on the monthly chart, because today we are on the last day of the month. So until it witnessed a very sharp up move, it is forming a shooting star formation on the monthly chart. So that's a very bearish sign. So clearly shows that the top definitely has been made for HDFC. And even looking at the daily charts, clearly there is bearish divergence on the charts. But HDFC is approaching its very crucial support zone somewhere around 2070, 2080. Currently it's around 2127. Almost 2% below it has got very crucial support zone. And earlier also, if you look at the second week of May, somewhere around 8th, 9th May, the stock had bounced back from those levels. Means I'm talking about the support levels around the moving averages. So I would say that 2070, 2080 is definitely very strong support. Yes, the top has been made for HDFC. There's no doubt about it. Looking at the monthly charts. However, I would say that if these levels are held, then we could see some temporary respite, but again it would go into consolidation, because now the upside seems to be capped around 2200 levels.
Alright, so those are the heavyweights for you. It's not looking good as far as these names are concerned. I just want to discuss the auto stocks, Nilesh, as well, because a couple of them will be reacting to earnings. We're expecting Eicher Motors later today, of course, but Hero Moto, not a good set of numbers from them. It was already down 6% in trade yesterday. What happens to Hero Moto? If there is a gap down, then what should the outlook be on autos? And in general, what's your call on the auto universe?
Well, Dipanshu, overall auto we have been bearish since quite a long time. Overall, the structure for the overall auto space looking extremely weak, be it Hero MotoCorp, Maruti, which is leading from the front, Ashok Leyland, which has also provided structural breakdown, Eicher Motor. So overall, the auto space is not good to go long as a contra bet as well. It is better to avoid. As far as Hero Motor is concerned, no doubt it has a major support level, which is placed around somewhere close to 2080. So if at all it opens with a gap down, there could be possibility of a follow-up selling as well. So watch out for the levels 2080 on the downside. That is the immediate support level. I don't think so there could be a relief rally or pullback rally in auto going forward. There could be selling pressure may accentuate going forward. So it is better to avoid autos for the time being. And I also just want to add, metals are also on a short side. It is better to avoid autos and metals for the time being.
Nilesh, a follow-up question. We still have almost 7 to 8 minutes for the pre-open. A follow-up question on Maruti. Since again the auto sales numbers are a day away, sometimes again it happens that before again around 31st we start seeing a sort of rally before that. This time very weak numbers are expected, and the stock has really again fallen yesterday again from the sort of highs here. So how is that stock looking to you? And also what on Axis Bank, where again the numbers were being announced yesterday?
Well, Maruti overall structure has provided breakdown. It is still looking weak. We could see the levels of 4800 to 5000 going forward. It is making lower top and lower bottom. It is like I mentioned, it is leaving from the front. There is no relief. Still, we have seen MACD sell crossover. So I do not see any pullback rally at current level as well. There could be possibility of a further sell off. It may take support near 5000 level. That is a psychological support level for the Maruti. Till that time, there could be a free fall we could see. The Axis Bank, the overall structure, it has provided a breakdown in yesterday's trading session. It has a major support level now which is placed around 680. So it may take support around 680 since the indicators are indicating some sort of oversold territory it has entered into. There could be possibility of a small pullback rally from 680 to 670. This pullback should be utilized as a selling opportunity. Like I mentioned, private sector space is looking weak for the time being, so it is better to avoid going long in aggressive long in private sector bank.
All right. Amar, just since we were talking about a couple of auto stocks, away from auto but auto ancillary, what's gone wrong with the Apollo tires? Look at the cuts that have come in, prolonged cuts in this counter. This month alone, it's lost over 20%. What's the chart indicating over here?
Yeah, I would say that Apollo has really, if you look at from the start of this month, from almost 200 levels, currently it's around 150. And on the daily charts, the negative momentum still shows to be very strong. And looking at the weekly charts also, that also displays the same. However, on the monthly charts, we are seeing that the stock has approached a very crucial support zone. So 145, 150. So currently it's around 150 odd levels. 145, 150 is a very crucial support zone for the stock. Even on the long-term charts, I'm talking about the yearly charts also, the stock had some very strong support coming around 155 odd level, so that also has been taken out. So I would say that 145, 150 could be a support level. There could be some temporary respite, but the short-term indicators are clearly displaying that the sell-off has been very sharp and it's there to stay, meaning any pullback will be used as a shorting opportunity. And the stock on the upside, if you look at somewhere around 160, 165, that's going to act as a very crucial resistance zone. So if it doesn't breach 145 on the downside, we could see the stock consolidating in this range of 145 to 160, 165. So that could be the range, but the overall trend definitely remains on the negative.
All right. Overall outlook continues to remain negative for the auto ancillary pack. In fact, almost 80% of the market is under extreme pressure right now, barring some of those defensives and a few other names. You have rest of the market coming under extreme pressure. Let's take a quick break, come back on the other side, pre-open to track. A lot of your nifty names will be reacting today. A lot of earnings reactions coming in. SGX is muted for the moment at least. You have the currency and the bond open as well. Lots to track on today's trading session. Back in 2 minutes with more.
Welcome back. You're watching the opening trade. About a minute left again for the pre-open rates here. What we're going to watch out for again? Couple of factors. Number one, crude prices have increased materially again yesterday, and then from that, European markets were trading soft. Futures actually not giving us any sort of rebound. Perhaps a bit of sort of caution there. US Fed rates, and because of that, largely the future sort of trade in US is going to be slightly sideways here. So those actually are all global sort of cues here. Asian markets trading mixed, and for us, edges Nifty is telling us 34 points down, so that gives us a bit of negative start possibility here. Now from yesterday, perhaps the most important level is actually going to be 11,130. So if there is no rebound towards that and higher levels, then actually we're going to see more selling because the positions are going to be covered more. From there, a couple of more reactions. Auto sector, the mid cap index, small cap index, realty index, all these indices again have breached 200 DMA, and especially the small cap index. Again, all those actually are going to be the watch out factor here. Perhaps auto sales numbers actually will start coming in from tomorrow, so that part of the market will also again be a watch out factor again for today's trade. FIs they continue to sell and they're net short on the index, so that's something again continues to remain a factor to watch here. But for now, the first rates have started to come by, and what actually we are getting is Nifty, Sensex almost 45 points up, Nifty again showing 60 point down tick here. Those rates will start getting adjusted here. So let's start again looking for stocks. What's the reaction coming on Hero Moto, the last wave result, Axis Bank, another one from the result perspective here. And then again we go to Tech Mahindra also. So Hero Moto, the first reaction coming as a 1% uptick. Let's go to Axis Bank. Again, Hero Motor basically there's also an exceptional element here. While the company reported subdued margins at 38% growth in profits, supported by exceptional gain here. Axis Bank 10% I think will be, I think the rates have to settle down, but again looks like a negative reaction is going to come for Axis Bank here. Let's bring Tech Mahindra also, where we heard again on our show also the expert commentary. Yesterday the profits were showing 15% decline again, and no major, though deal commentary was looking positive, but no major exuberance again coming out from that perspective here. That's Reliance below 200 DMA yesterday, and now again basically we are looking for more subdued trade here. SBI 2% downtick happening there, and then let's bring some more banking names. PSU banks actually, in fact, they were trading very weak yesterday, and the index again was trading on a very subdued note here. So let's bring those stocks here. Let's bring Union Bank, Bank of Baroda again, how they are trading right now. We'll go across to Tata Motors also, where we heard again from the management again they want to do more partnerships. They want again to distribute the capex requirement. That is not cheerful for the stock again. That just tells you the company is really finding it tough again to generate volumes, and also justifies cost expense here. But that's a stock for you. 2% uptick at present. Apart from that, let's bring PNB Housing Finance. Again, the profit growth was 57% versus last year, but that is looking like a good number. And also the target price basically has been upgraded by a couple of brokerages. So the stock is still showing 2% downtick again. So no major sort of surprise coming there. Coffee Day Enterprises, let's look at that stock also. Yesterday it was 20% lower circuit. So again, where the stock is trading right now, there's a stock for you almost another 20%. Let's wait again. The rates actually have basically are getting updated, but looks like it's another 20% circuit again coming for the stock here. Sequel Logistics also, let's bring that stock. Arbil Bank 10% downtick coming there also. So these stocks actually are reacting very sharply. Lower circuit for Sequel Logistics. So these are some big movers again at present. Apart from that, let's bring some stocks again where we actually saw ADR reaction also. So HDFC Bank, ICICI Bank, let's again look at those stocks. Basically what actually we saw was some good sort of reaction coming out for a couple of IT names. That's HDFC Bank, subdued sort of reaction coming there. Let's bring TCS from here. Ideally currency slight mild depreciation is expected. TCS, there has been long positions yesterday. So what we are getting for the start is a slight softer opening here, but again it's a consensus buy again from our guest today. So watch out for that here. But currency again has opened slightly weaker here. From there, a couple of more stocks. Let's go across to again some more reactions again, and from that perspective, let's bring some metal names and see again how that is shaping up. JSPL, Tata Steel, we saw again a short selling yesterday. Vedanta again almost 0.3% up, a sort of relation to crude price uptick, but other steel stocks they actually were seeing heavy selling yesterday, and again looks like that sort of trend again is going to continue. But for now, if I sum up the entire pre-open, that's telling us a 30-point downtick for Nifty. Bond yields again they open almost flattish. Rupee has opened with a sort of negative bias, and again basically we are seeing selling in financials. We are seeing selling in also in metal names. Hero Motor has opened up, and perhaps cement names again. Tech Mahindra is 5% downtick, again gap down. Cement names, one or two last names, and then we go back to our guest here. That's Ultratech, one of the calls from our guest. Grasim also, let's bring that counter also. So again mixed trend for cement. So that sums up our entire pre-open. Now let me welcome Rajat Sharma, CEO of Sana Securities. Rajat, good morning and welcome to the show. First up, what do you make out of the numbers being announced yesterday? Whether it was Axis Bank, Hero Motor, Tech Mahindra, how are they looking to you?
Good morning, Piyush. I think numbers for most of these companies were below expectation, whether it was Axis Bank or Hero Motor Corp, and a lot of this was on expected lines. You look at Hero Motor Corp. In fact, you were talking about auto stocks. Let me just talk about the entire auto stocks together. Hero Motor Corp and other two-wheeler companies have been struggling because the number of units being sold are coming down. They have to change their entire fleet before April 1st next year. If everything were to stand the way it is, they have to change everything to electric models, and that's because the notification is 150cc or below vehicles have to be electric by then. Now for both these companies, Hero Motor Corp and Bajaj, but for both these companies, almost 80% of their fleet is below 150cc. So it was only expected that their sales would come down as people delay their buying decisions. Every auto company right now is facing problems. You were talking about Tata Motors, that has its own problems. JLR is just not reviving, and at the back of that, a lot of these auto ancillaries, you were talking about tire stocks, 35% of tire sales happen to original equipment manufacturers. If cars are not being sold, how will tires sell? So the auto sector as a whole, there are so many problems, and I expect this to continue. I've always said that Hero Moto and Bajaj and TVS, these are the kind of stocks which investors should add to their portfolio when they start making a portfolio in any kind of markets, whether expensive or cheap. But right now there is a problem which is of the nature where you don't know what would be the sales number for these companies going forward in the next 2 years or 3 years or so. So I'd really recommend in these kind of overvalued markets to wait this out and then see if it makes sense to buy these once things are more clear. On why markets are falling overall, I think it was only expected. Much like many other financial advisors, have been warning for a long time that these markets are overvalued. They've been overvalued. In fact, interestingly, this morning I put out an article where we've done the historic P multiple analysis of Nifty 50, Nifty 500, and the Nifty Mid Cap Index. The interesting thing is not that even now all these indices are trading above their 10-year averages. The interesting thing is the 10-year averages themselves have moved up by 10-20%. I remember a time when 20-21 on the Nifty trailing PE multiple used to be considered expensive, and today 22-23 looks the 10-year average, because last 3-4 years all these indices. So what I'm saying is we've had a very long period of overvaluation. You may call it because of government policies or whatever that it's coming down, but it's obvious that it had to happen sometime, and that's what's happening.
Okay, so valuation correction is happening right now, and there is also selling pressure coming from FIs. Again, that all again is resulting into a lot of sort of valuation adjustment, primarily because of sector issues again. But what's happening right now, we have again another minute to go by again before we start seeing some settled rates. Couple of names actually I can see where there is some good outperformance happening here. Gujarat Gas, let's bring that stock on the screen. Looking like again there is going to be a sort of good sort of reaction again on the numbers here. That's 11% uptick happening there. Stock is showing some good uptick here. Second stock again where we are seeing some good possibility, Guru Finance, almost 4% uptick happening there. Canara Bank, 2% uptick. You also actually are seeing on the larger side, Bank Nifty is something I think you should really take note of here. The settled rates are telling us 200 point is a gap down start which is going to happen, and only PNB perhaps at present is looking positive on a flattish note. So market breadth very weak in the Bank Nifty, and that's where I think we are going to focus on the next sort of chart question here. What's happening with the Bank Nifty here? On the index side, Hero Moto 0.5% up, unlikely to sustain. I think Maruti basically almost 0.5% up, also very unlikely to sustain, primarily because again this sort of sentiments on the sort of July numbers actually is going to come back here. But that's the first shot of the settled rates. Now Amar, coming back to you, Bank Nifty is telling us definitely that the market rate is outright weak, again all stocks into negative. From that perspective, a view on IndusInd Bank, how's the counter looking to you after the selling yesterday?
Yeah, looking at IndusInd Bank, what we are seeing here is that technically from a long-term perspective on the monthly charts, the stock definitely continues to be weak, and it clearly shows that any bounce back will be used as a shorting opportunity. And the low that was made in October, somewhere around 1330 odd levels, so it's very close to approaching those levels. So clearly that's going to be 1320, 1330 is going to act as a very strong support zone, but that being taken out, then the stock could witness further sell-off. And also yesterday the stock witnessed a very sharp sell-off, but it's approaching close to its support levels on the weekly charts. So clearly I would say that somewhere around 1280, 1300 levels would be a very strong support zone, and we could see some bounce back from those levels towards 1380, 1400 levels. So it seems that it's approaching a very crucial support zone.
Okay, and I will tell you why actually the Maruti Hero sort of outperformance actually is going to be extremely tough. Let's bring TVS Motors on the screen, and then from there we go across to a couple of more names. M&M Finance, let's bring that stock also. From there we also go to L&T Finance, and then we also go to Ashok Leyland. All of these stocks actually are going to tell you only one aspect again, that actually auto stocks actually are going to have a negative start here. So these stocks are telling you that why the task of Maruti Hero Moto is going to be extremely tough again to stay in the positive here. Apart from that, we actually are seeing a bit of negativity in metal stocks. That's one summary here. But let's go to steel stocks. Now, Nilesh, what's the word on JSW Steel or Tata Steel or JSPL? I named 3 stocks, by any one of them, if there is any strategy which you are seeing as a possibility.
Well, overall metals has been weak and we have been saying it is better to avoid, and one can look for opportunity on the short side rather than going long. I do not see any sort of a pullback coming in a particular metal counter. If at all it comes, then should be utilized as a selling opportunity. The preferred bet to short could be Tata Steel at current level, or maybe if you see any pullback rally towards 420, the stop loss should be placed around 440. On the downside, we are expecting immediate target of 400. So that is the one counter that is looking weak. Apart from that, Vedanta is a 3-session straight fall we have witnessed. There could be possibility of a further sell-off to continue towards 145 kind of a levels. So apart from that, Hindalco is another counter which has provided breakdown from its rising trend line. It is a perfect short candidate at current level. One can expect on the downside the levels of 185. One keep a stop loss of 193.
Okay, so that's the word on couple of counters, and also what actually the trend actually so far at present is looking like. All sectors are starting with a negative bias here, and also VIX index, again the rates will get updated later, but all sectors again actually we are very clearly seeing a negative trend here. So that tells you if the market breadth is weak, the starting rate is weak again, that tells you the entire story what you should be actually expecting. Now VIX actually perhaps is showing a sort of uptick here. But Rajat, coming back to you, auto you just talked about, and if I'm talking about suppliers to auto, that is steel sector, again if I'm talking about a lot of ancillary commodity names here, is that something which you expect a sort of continued period of underperformance for the next few months?
No, absolutely, and I think the only stock in the steel sector that I've liked is Steel Authority of India, the SAIL stock, because that's the largest steel manufacturer in India. Whenever there is revival in this space, that stock will benefit the most. They have done a capex over the last 4-5 years. They've improved all their facilities, and that's the only company which does not have the kind of debt problem which a lot of these other companies have. Having said that, right now, I think if you were to ask anyone what's the one reason why you should get into steel space or buy steel stocks, I don't think there is anything positive which makes it makes any case for looking at this sector at all at this point.
Right, again, so that's the word on the steel again, indeed again showing a sort of a negative trend again, but from the mid caps where we are seeing some positivity, let's call out those names. Trent again is showing a 2% uptick, again that will show you a green screen. Then again Jamna Auto 2% uptick there, Jubilant Life 2%, again then you have EID Parry 1%, EIH 1%, Orient Cement 1%, Timken 1%. A lot of these stocks again they are the small cap mid cap picks here, but again we have a caution, the small cap index is below 200 DMA, market sentiment is weak. So while again we are calling out some green names here, they all actually basically are going to face the headwinds on the market here. So that's one word, but Gujarat Gas is definitely the breaking stock here. Rajat, a quick mention, Gujarat Gas, any view you have? I have 1 minute again before the market opening.
No, I don't have any view on this. I'm sorry, I don't track this.
Okay, and Amar, a quick word on Gujarat Gas. How's the chart looking to you? Pre-open showing 10 to 11% uptick.
Yeah, but I would say that sustaining above 170 is going to be very crucial for the stock. If the stock sustains above 170, because that's a major breakout level, then it could head higher towards 180, 185 levels.
Okay, so that's on one stock which is definitely standing out at present amidst all the sort of red screen actually we are witnessing right now. Almost couple of more seconds, 30 seconds to go by before the market opens up. What we are going to watch out for as the market opens, reaction to auto number, reaction again to the banking number, what happens to the market breadth. Again it's looking like a weak market breadth, and from there IT index, can that outperform, can that lend some support to the market. TCS again showed some, Infosys again has been consistently maintaining around 800. Again can that happen, IT again can do that sort of heavy load lifting today. So now again the rates will start coming on the screen, and let's find answers to our questions here. Nifty starts with a much stronger sort of weak opening. Again what we were seeing in the pre-open, 0.6% down, almost 60 point downtick happening for the Nifty. Nifty futures again showing a valuation compression here. Bank Nifty 200 point downtick again starts with a very weak trend here. Maruti is a top gainer right now, again 0.3% up, and that tells you again it's looking like a very weak market bet. Again, there are a handful of 6 or 7 stocks in the green, so we are actually starting with a bias of 40, almost 40 to 42 stocks in red, and again 7 to 8 stocks in green here on Nifty. On the sectoral side, again all sectors actually are trading into red right now, and VIX is into green, but it's a very weak market bet again, so that's one aspect. The first stock, Gujarat Gas, starts with a 10% uptick. That's the first breaking stock. Again, the second stock actually we are seeing is HBL Power, a sort of good uptick here. On the headline numbers, Hero Moto, the result reaction is coming by. You actually are seeing a 0.5% uptick there. Axis Bank again not able to show green again. We are seeing a correction. So again, negative start, thumbs down from the market. The top loser in the Bank Nifty is Axis Bank, 2% down tick, which is happening right now. Let's see again how Tech Mahindra is shaping up in the trade. We actually are seeing again good selling pressure across from mid-cap IT also. But Tech Mahindra is the top loser in the Nifty right now, 3% down is what we are looking. Couple of names from the cement, Ultratech, the short call from our guest again is 1% down right now. We are seeing selling into OMCs also, BPCL, IOC again, they all actually are declining. IndusInd Bank continues its downward journey. You actually are seeing selling in Reliance Industries, HDFC, Bajaj Finance, ICICI Bank, HUL, Bajaj Finserv, SAL Tech. All these names actually are the big names, and they all actually are showing a decline right now. Grasim is showing a bounce at present, 1% uptick again, so that's something really interesting. But apart from that, let's go to derivative space before again we go across to our guest. And what actually we are finding is there are some strong underperformers. Ajanta Pharma almost down 4% right now. Then you have Tech Mahindra, the downfall is increasing, now 4%. You have again Kaveri Seeds 3% down. You also again have selling into India Cements 2% down. So again these all actually stocks actually are down sharply in the F&O space right now. On the gainer side, there is a bit of positivity for Sun Pharma, and there is a bit of follow-up positivity in Hero Motor now, 1% uptick happening there. But apart from that, no major open interest addition is happening, and that's a matter of concern right now for the bulls. If there is any open interest addition happening, that is short build-up, which is in CESC. So the first aspect today in F&O trade at present is there's hardly any sort of open interest build-up which is happening, and that's again is going to look very, very tricky again from where we are right now. So let's first find out how's the trade looking, and let me go across to Amar. Amar, what's the first starting bias, and let's start with the index here, Nifty or Bank Nifty. How's it looking to you?
Yeah, I would say that Nifty and Bank Nifty, I would say this is also the end of the month, and the levels are also very crucial. So it has opened with a down gap. But I would say that if Nifty manages to sustain and close above 11,100 levels, because that's going to be the first level of crucial level for Nifty. Because on the downside 11,000, 11,050, that again is a very strong support zone. So I would say that it could trade in a small zone 11,000, 11,100. Because taking out the 11,000 levels could definitely mean, and sustaining below that could mean that Nifty could correct towards 10,800 odd levels, because overall the short term bearish momentum also is not showing any signs of decline. So that's definitely a cause of concern. But sustaining above 11,100 levels, closing over that level should be important. On the monthly charts also it has taken out crucial support zone, so I would say that the bias definitely remains in favor of the bears.
Right, bias remains in favor of the bears. And let's bring Glenmark Pharma on the screen. Again, we actually are seeing that yesterday in the second half, the first half belonged to the pharma. Again, they really outperformed, took off. Second half, along with the market, we saw profit booking happening in pharma. So Glenmark now is 2.5% down. So again, that is one aspect here. And Tech Mahindra, let's take a follow-up call on Tech Mahindra, which is down 4%. Nilesh, any stock you want to share, or a word on Tech Mahindra also? How's it looking? 4% down?
Well, Tech Mahindra is extremely looking weak. It has opened with a gap down, and what we are witnessing is that continuation of a sell-off, selling pressure is continuing, and it may continue towards the levels of 600. So that is the immediate level on the downside where one could expect, which is again an immediate support level for the Tech Mahindra. As far as IT is concerned, Infosys and TCS, and along with that Mindtree. So these are the three counters from IT space looking better. One can utilize every dip on a buying side as a buying opportunity. Apart from that, PVR is another counter that is looking weak. I just want to recommend on the sell side, one can keep a stop loss of 1590, and downside one can expect the target of 1500. The other counter that we have already shared is Ultratech Cement, still looking weak. It has provided a perfect structural breakdown, symmetrical triangle formation breakdown from the top. On the downside, one can expect a target of 4200. Below that, it can slip towards 4100 as well.
Okay, and that's Ultratech Cement now down 1% from the highs again, and we actually are seeing the stock trending down. Bring Grasim again. If Ultratech Cement is going down again, yes, there is a bit of positive for Idea Cellular, which again is also a sort of where Grasim has a stake, but this is Grasim now. The high is gone, the stock has fallen, and now it's 1% down, almost 757. So you got the opportunity, and now the stock is down sharply. But Axis Bank is something which is making a move here, 3% down right now. Amar, a word on Axis Bank, and in addition, if you want to add any stock.
Yeah, I would say that Axis Bank continues to remain bearish, but it's approaching a very crucial support zone. If you look at somewhere around 650, 660, that's a very crucial support zone for Axis Bank, because Axis Bank on the long-term charts, be the monthly charts or the quarterly charts, continues to remain bullish. So effectively, it needs to find some support level, and ideally 650, 660 is a very crucial support zone from where we could see some bounce back in the stock, but on the upside again, Axis Bank would run into resistance somewhere around 720, 725 odd level. So that could be a range for Axis Bank. However, the trend, short-term trend definitely remains negative, but the long-term trend is positive for Axis Bank.
Okay, so that's the word coming on Axis Bank at present. The stock basically is showing accelerated fall here, almost 4% down here again is what is happening in Axis Bank. The volumes are extremely strong. That's the word there. But Rajat, coming to you now, if I look at the markets right now, what you would like to really buy, where you would like to place your money, or you would like to increase your weightage or turnover weight, what is that sort of safe area?
So Piyush, again, even on that, nothing's changed. There are sectors which have been undervalued, and sometimes it gets boring to say it over and over again, but the truth is that both IT and pharma still look the best sectors to invest in. And this is nothing but valuations playing out. A lot of the financial services names are falling, and a lot of stocks in pharma and IT have started doing well. Pharma now, IT has been doing well for a while. And why I say valuations are playing out is because don't we all know that when rupee appreciates, pharma tends to underperform, and yet rupee has been appreciating the last 6-8 months, and that's when you see outperformance in large cap IT space, whether it's Infosys or TCS, even Tech Mahindra. We were talking about the dollar revenue was stable, but rupee revenue had fallen more in line. I was just reading their results, and yet these stocks in the IT space have continued to do well. That's because they were available at extremely cheap valuations the last year, 2 years. Just that market was overlooking that, and fund houses were sticking to stocks that were market leaders and that would keep seeing a consistent inflow of these SIP money and fund money. And this thing sort of corrects itself whenever there is a churn in the market. Beaten down sectors come up, and some of the sectors which are leading the market start to underperform, and we will see that. So I think if you have conviction, if you're holding stocks in IT space, Infosys is one of my favorite stocks. In pharma, I believe you should hold on to 3-4 of these large cap stocks, Sun, Lupin, Dr. Reddy. You can hold a basket of these stocks, because to the extent any of these stocks falls, you can't really predict today which one will get an 834 or like a warning notification or inspection notification from the FDA. But again, these sectors are still the best hunting grounds for investors, and whenever market falls, not only will these cushion the overall fall in the market, but whenever there is a bounce back, the bounce back is going to be the sharpest here, and these are the stocks that will take the market higher. Other than this, we have a couple of recommendations in financial services which I spoke about last time. Federal Bank was one of them, and you were talking about housing finance space with so much turmoil that's happened there. DHFL going down, Indiabulls facing its own lawsuits. So I think Canfin Homes as a stock had fallen a lot for reasons I can't explain. The numbers continue to get better, their NPS continue to come down, and they will eat into the market share of a lot of these companies that are going bust. So that's another stock that we've added. So in financial services, despite high valuations, we find these two stocks very cheap. So besides pharma and IT, I would believe that if there is something really compelling that you should look at in other sectors, you'd buy. But other than that, all sectors are facing their own problems. So not an easy market to buy stocks in.
Sure, again, so those are the list of stocks again where Rajat is bullish, but I'll tell you again what is happening right now. As we started again, we talked about it, how again open interest is missing again today's trade. So again, there is going to be that sort of spring effect here. When you go down again, actually you find there are no sort of follow selling volumes coming, then you register a bounce, then again you start struggling sideways. So what's happening right now on the Nifty is actually grinding down. There's pressure coming from the financial stocks here, but you are seeing a bit of bounce coming from a couple of auto names here. So TVS Motor is now back into green after starting with a negative bias. Now the stock is actually a day's high, almost 1% up. That's a stock for you again, TVS Motors, and the numbers are going to come again from tomorrow onwards here. So again, there is a bit of catch up which is happening here. Maruti is holding on, again also Hero Motor is holding on. There's Bajaj Auto is back into green here. Again, that's another sort of trading at days high here. So this is auto index again. Looks like again perhaps there is some anticipation what could happen tomorrow, but the expectation is wholesale volumes are going to be very weak again for July here. But Amar, are you reading anything into the auto movement here, auto stocks?
Yeah, I would say that you just mentioned the stock TCS. I would say the TVS Motors. I would say that there is a very high probability that the low which TVS has made today should ideally hold, because this is a very crucial support zone, and technically also the stock has formed a strong support. So I would say that and the opening today also has been strong. So I would say that the low of TVS Motors is very crucial today, and there is a high possibility that the stock could reverse from these levels and rally towards 375, 380 levels in the short term.
Okay, so that's the word. The breadth is also looking much better than where actually we started. So a bit of small bounce again after sort of carnage we saw yesterday again. That was something expected, but again the most important part is not actually have seen the positive part here. What actually it could sustain for the next 2-3 hours here. If it could sustain, then perhaps some relief it could start coming by here. But a couple of mid caps worth mentioning here: Orient Cement, Heidelberg Cement. We are seeing some positivity there. Quest Corp is up 5% now. Again, there is some positivity there also. Gulf Oil Lubricants is almost up to 3%. Navin Fluorine is up 2%. So there are some outliers again, some outperformers which actually are registering their cause here. VIX index is up 2% right now. So perhaps the wait is also for the VIX to move up here. If the VIX is up almost between 3 and 5%, then call writers can take a sigh of relief and they can come back and short the market in the second half here. So again, there is also a tactical call again which you really have to prepare for here. So VIX perhaps is now 2% up. Some more comfort again yet to be sought from the call writers here. From there, a couple of stocks before I go back to Nilesh here. What we are seeing now is selling into OMCs. Nilesh, oil marketing companies, there is a short build-up which is happening in derivatives. Crude prices showed a material uptick here. What is the sort of a trend on the charts looking to you? Though we are seeing some recovery, but how is the overall chart looking?
Well, overall chart for the all the OMCs are still looking weak. It has provided structural breakdown, and all the OMCs are making lower top and lower bottom on the chart. Especially BPCL, if you pull out the chart, you can see we are witnessing some sort of a bounce back from the lower levels. There could be possibility of a bounce back may extend towards the levels of 340. But overall, I think this rally or this bounce should be utilized as a selling opportunity. HPCL is another counter that is also looking weak. If you look at the overall structure for the market now, Nifty is taking support near 11,000. That is a psychological crucial support level for the Nifty. Whereas if you look at the Bank Nifty, 28,500, that is the immediate support level. So both the index are trading near to their crucial support levels. So there could be possibility of a small pullback rally from these levels. Not unlikely, very unlikely to sustain at high level, but at the same time we are expecting some sort of a pullback rally in the index.
Okay, so as Nilesh was saying, my eyes actually were on Axis Bank, and the stock will come on the screen. The stock actually is suffering a carnage here. It's a complete carnage, one-way selling which is happening. You're talking about a 6% down where the stock is right now. That's a breaking stock for you. 6% decline, and this 6% decline is happening only with a 3% build up in open interest. What happens if this open interest starts spiking more towards 5 and 7%, but with only 3% open interest, the stock actually is seeing a good selling again into the cash market also here. But Amar, a word on Axis Bank, already around 660. Where is the support, and do you foresee any sort of chances of rebound today?
Yeah, I would say that looking at Axis Bank, I would say the long-term trend remains still strong for and positive for Axis Bank. It has witnessed a sharp correction from almost 800 levels, currently around 663 odd levels. So I would say today's closing and today's low is going to be very crucial. The short-term trend definitely on the daily charts as well as the intermediate term trend on the weekly charts, they continue to be extremely negative. So there is a possibility that we could see some further selling, but it seems that towards 650, 660 current levels, it has some support. Taking 650, taking out 650 level and trading below that level, yes, then there definitely could be a cause of concern for Axis Bank, and then it could correct all the way down towards 600 odd levels.
Okay, so that's on Axis Bank, some sharp selling happening there, but we are seeing again selling momentum in durables also. Voltas is down 1%, but FMCG is something which I want to ask here. Let's bring Britannia on the screen. That's Voltas for you, trading at days low. This consumption durable here. Now let's go to consumption staple here. That's Britannia. Now the part here is not 2.5% decline today. Let's draw a 1 month chart, and I will tell you in the last 4 sessions it has broken down twice here. And that is again almost a sort of offloading which is continuously happening. That's Britannia for you, continuously declining, 1 month low, and this is also being reflected by some more. Again, bring Nestle also, and let's see again if yesterday's selling is being followed up today also, and then we'll pose this question to Nilesh again on what is happening on the charts here. That's Nestle for you, still looking better, not as worse as Britannia. But Nilesh, how's Britannia looking to you?
Well, if you look at the structure for the Britannia, if you just pull out the chart of last 1 year, you can the triple bottom breakout is clearly visible on the chart. The breakdown was placed somewhere close to 2600, and it has witnessed today's trading session we have witnessed a breakdown from the same. There could be possibility of a selling pressure may extend towards the levels of 2450, 2400. So the chart clearly indicates the trend. The immediate trend is looking weak. Overall, FMCG as a sectors is looking weak for me. Britannia could be the preferred pick on the sell side, since it has provided breakdown from its triple bottom pattern. On the downside, the immediate level, like I mentioned, expectation could be 2450 to 2400. One can keep a stop loss of 2620.
Okay, that's the word. While actually you're looking at Britannia, again don't miss TCS. That was a consensus call from our guest. The morning first 10 minutes again of slightly softer start, slightly pullback, that is all finished now. TCS is trying to do a recovery here. That's TCS for you. Again, a bit of recovery. Again, let's keep watching it for the next hour or so. Again, that's the consensus call from both Amar and Nilesh. So that's one on TCS here. Now closing calls. Amar, last closing basis. Any update you want to share?
Yeah, I would say that I had spoken about Adani Ports that continues to witness selling pressure. So any pullback should be used as a shorting opportunity, and the stock towards anywhere between 375, 376, that can be a good shorting opportunity for Adani Ports.
Okay, and Nilesh, last call, if you want to share anything.
Well, just want to update regarding my Ultratech Cement put option. It has almost reached our target in 4200 put we recommended buying. The stock is down close to 2%. The other stock that I recommended was IGL, still looking weak. One can create a short position current level as well. The stop loss should be placed around 390. On the downside, we are expecting target of 292 and 290. Overall, like I mentioned, 11,000 and 28,500. These are the two key levels to be watched out for in Nifty and Bank Nifty.
Okay, so Ultratech Cement, almost the target has been reached here. So that's one update. So that remains negative. Grasim, let's bring that counter again. Nilesh, Ultratech comments actually creates curiosity around Grasim. What's happening there? So that's Grasim, a mild rebound has happened. This is happening because of Idea, where actually we are seeing a sort of a rebound in the Vodafone Idea stock here. So again, watch out for that space. Again, there's an interlinked trading which is happening there. But Rajat, coming back to you. Any sort of last theme which you want to address or you want to update, you liking at present?
no, Piyush, as I said, a couple of sectors being IT and pharma, which is, favorites right now, and other than that, a few stocks in the financial services space. As a last word, I hope we could just stop reading a lot of distressing news that you keep reading in all the articles that you read about overvaluation and about government policies and stuff. And, I think this is a time where it would be extremely encouraging to see if government comes in and something sustainable which can make investors feel confident. I was reading something from Nirmala Sitharaman about cutting interest rates by 50 basis points. I think if you do get to speak to someone in the government, just tell them instead of doing that, do away with the long-term capital gains, because they're not going to collect that. So I think from a policy front, if something could happen which will sustain the market, and we read less of these depressing news about policies and regulation, that would be ideal. So in terms of stocks, not much to do, but in terms of requests and policies, there could be a lot done right now.
Absolutely, I think LTCG is definitely something, a case study to talk about here, how much taxes were really collected by the government. But that's some food for thought. But what's happening? Bank Nifty, again, we have to ask this chart call here, because Bank Nifty is really giving us some glimmer of hope here. Trading at day's high right now, 100 points down. We again at one point of time, and I should say it's a 150 point recovery from the day's low. So Amar, closing last basis here, Bank Nifty, is it really looking convincing, and what's the resistance and support now we should look for the Bank Nifty?
Yeah, I would say that Bank Nifty definitely is showing some signs of positivity today after opening with a down gap. So there is a possibility that we could see the Bank Nifty move upwards towards 28,800. That's the first level of resistance. If that is taken out, then it could trade as high as 28,900, 950 levels.
Okay, so that's the word coming on Bank Nifty. And let me also ask you another question, Amar. How is Yes Bank looking to you? Because Yes and IndusInd are the two stocks which are moving up. So any positive if you can see on them, or even if not Yes, is ICICI Bank looking convincing to you?
Yeah, just talking about Yes Bank, I would say Yes Bank more or less is flat, so I wouldn't want to comment much on that. So looking at ICICI Bank, I would say yes, ICICI Bank is managing to sustain, and today also it's a positive day for ICICI Bank. And technically, if you look at ICICI Bank, continues to be extremely strong on the long-term charts, and yes, on the weekly charts we are seeing the stock definitely displaying some signs of I would say divergence, because the high that was earlier made towards 443, 444 levels, now that's acting as a short-term resistance. If that's taken out, then the stock is definitely headed higher. The daily charts clearly inspire confidence that the stock could trade higher once it starts sustaining above 435, 436 levels.
Well, that's all the exhaustive coverage again we have done on all the charts here again today. And as we move towards the break, we actually are talking about a good recovery in the Bank Nifty. So let's see again if it sustains for the next few hours here. But gentlemen, thanks a lot. Rajat, Amar, Nilesh, again for all your insights into the markets and stocks. We'll take a short break, but stay tuned as we return from the break. We'll again see at the first quarter earnings. They are taking center stage. Vinti Saraf Mutreja, Zero Data at Vinti Organics will join us to give us a breakdown of the company's first quarter earnings. Along with that, we'll have a look at Hero Motor and Axis Bank's first quarter performance and a review of the same by the respective management. Stay with us.